This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Market rebound. Stocks took off and never really looked back, logging their biggest gain since September.
Closing the gap. Did Walmart just prove it can match Amazon's retail muscle?
Pushing ahead, the House takes a first step towards an historic tax code overhaul. But the hard part may be yet to come. Those stories and more tonight on Nightly Business Report for Thursday, November 16th.
Good evening, everyone, and welcome. The mood was upbeat, the buying was heavy, and the bulls were firmly in control. Stocks regained the ground that was recently lost. They did so on the back of improving profits at some of the country's biggest companies and movement on tax reform, two of the issues that have powered so much of this year's rally. Today, the Dow Jones Industrial Average advanced 187 points to 23,458. NASDAQ up 87 points to close at a record, and the S&P 500 added 21. Our Bob Pisani has more now on what took stocks higher.
Stocks rallied big time today, reversing 6 straight down openings. We opened with a bang and kept up the momentum throughout the day. 4 stocks advanced for everyone declining. What happened? Well, first, Washington did something. The House passed its version of a tax reform bill. Never mind, the Senate has to act. Any progress on tax reform is cause enough to celebrate. There's also a couple of other factors. 3 big names had big moves. Walmart and Cisco had big earnings beats. Procter & Gamble moved up because activist investor Nelson Peltz finally appears to have won a seat on the board. Finally, high-yield bonds turned around. The high-yield market's often considered a proxy for investor willingness to take risk. That market's been weak for a couple weeks now, but much of the weakness has been in a very particular part of the market, telecom companies, which have faced very difficult times. And once they stopped dropping, the high-yield market started to stabilize. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
As Bob just mentioned, Walmart reported a strong quarterly result and raised its profit outlook. The shares hit a record, gaining more than 10% today. That added about $27 billion in market cap. The results were helped by strong online sales. And as Courtney Reagan reports, some say that is giving Amazon a run for its money.
Walmart may be solidifying its position as the world's largest retailer. A key sales measure for Walmart saw its biggest increase in 8 years, marking 13 straight quarters of growth. The retailer says there is some sales benefit from consumers buying in advance of the hurricanes and to replenish or rebuild afterwards. But even without it, those sales would still be the strongest in years.
These are great numbers. This validates, I think, what Walmart's been doing. Clearly, the investment in e-com, but more importantly, like the stores look better. Right. Better merchandise, cleaner stores, higher level of service, and I think that's all working for that Walmart consumer.
Analysts largely agree Walmart's commitment to better pay and training for store employees has translated into a better shopping experience for consumers.
Happy employees equals happy customers, and that was the biggest problem. And you can see the cultural shift in the stores. You could see it, within a year, employees actually care.
Walmart may also be closing the gap on Amazon. Amazon-owned Whole Foods has been lowering prices on certain items, but Walmart just posted its strongest grocery sales in 6 years.
What I think is so critical about what Walmart is doing is that on June 16th, when Amazon bought Whole Foods, the world changed. And you were either on the right side of the wall or the wrong side of the wall. And Walmart was clearly on the right side of the wall.
Walmart acknowledges some of the grocery sales bump was hurricane-related food spending, but also says a combination of lower prices, improved quality, and options like order online, pick up in store have been steadily improving its food performance for a couple years. Grocery is Walmart's most critical category. It's more than half of total sales, and it's a repeat trip driver.
You can go online, have them basically pull all your stuff for you, and then throw it in your car, right? That's fast. So that person that maybe didn't want to go back every week, they're more interested in coming back now.
The retailer's U.S. e-commerce business has been a major area of investment, and it's paying off. U.S. online sales grew 50% year over year. Solid growth, but off a still relatively small base. eMarketer estimates e-commerce makes up just over 3% of Walmart's total sales. All the parts together are working to push Walmart's growth just in time for the holidays. For Nightly Business Report, I'm Courtney Reagan.
John Brick joins us now to talk more about Walmart's earnings, taking on Amazon and what he sees ahead for the big retailer. He is retail equity analyst at Morningstar. Welcome. Good to have you with us, John. It was a lovely report from Walmart today. Did the market, though, overreact? Is it as good as that stock reaction suggests?
Yeah, thanks for having me. Well, first, I do think the stock is a little bit overreacted. I mean, I think you guys prefaced it before that the tax budget and a lot of things and the market up a lot really helped the stock. And more importantly, I think you can point to the headlines that really helped Walmart stock today, the faster sales growth, but more importantly, the 50% e-commerce growth is getting the stock working higher, not necessarily the long-term competitive position, we think.
You know, they also managed to come in with this report by discounting as well, which a lot of retailers have not been able to do. And the talk on the street is that maybe they are going to be the successful company to challenge Amazon. Do you think that's the case or not?
Well, obviously, they're challenging Amazon, and they're the clear number 2 player in the space. So Amazon number 1, Walmart 2, and you have Target number 3. So they are challenging them. But again, they're challenging them on an e-commerce front. And as you guys said, that's a 3% part of their business. More importantly, they still have around 60% of their sales in grocery. And when you think about the grocery space, you have big players like Kroger still, and you have Aldi and Lidl expanding. And yesterday, you just heard Walmart lowering prices, so that is not going to get any less competitive. And so over time, we think that Walmart still is going to face a tough hurdle in that consumer space. So
it's nowhere near as big, but obviously Amazon just bought a fairly significant grocer itself not all that long ago. Let's play a game of Would You Rather, John. As a stock investor, would you rather Amazon or would you rather Walmart?
Yeah, listen, Walmart's up 40% this year. I mean, 40, that's a big number for the largest retailer in the world. I would not want to own Walmart here. I would look to Amazon. I mean, they have a lot of things going. They're obviously dominant on the online e-commerce front, but they also have a lot of other areas, online web services and AI and potentially the pharmacy down the road. So I would stick with Amazon over Walmart here.
What would convince you or change your mind and get you to choose Walmart?
Quite honestly, it would probably be more of a valuation play, right? So Walmart started the year at $70 a share, and it's now at 100. If we can pick up Walmart back in the 80s, maybe that would get me more inclined because Amazon is an expensive stock for good reason. But I think it would start with the valuation. If we can get Walmart back in the 80s, I would be more of a buyer of Walmart there than I would Amazon.
All right, John, thank you very much. We appreciate it.
Thanks,
John
guys.
Brick with Morningstar. Meantime, the House today passed a monumental bill to overhaul the tax system for both businesses and individuals. While Republicans in the House were celebrating today, the outcome is less certain in the Senate. Ilan Mui is in Washington tonight.
Republicans scoring a major victory today as the House passed its version of a tax reform bill. The final tally, 227 to 205, a comfortable margin of victory for the GOP. They had said they would get this done before Thanksgiving. There was a lot of skepticism over that timeline, but they were able to pull it off, and Speaker Ryan said a lot of the credit goes to President Trump.
From the very start, we said that failure is not an option, and the president and his team have worked so constructively every step of the way with us. He's been a tremendous partner on this issue.
There were a few holdouts, though. 13 Republicans voted against this bill. Many of them were concerned about the limits to the popular state and local tax deduction. No Democrats voted for the bill either. The ranking member of the House Ways and Means Committee, Democrat Representative Richard Neal, said that this is a tax bill that would hurt middle-class Americans.
State and local property taxes, they're going to take them away, the deduction. They're going to pare back the mortgage interest deduction. All of this advertised on the basis of a middle-class tax cut? People at the bottom end are not going to get much from this tax cut.
Republicans also acknowledged there is more work to do. Attention now turns to the Senate, where Majority Leader Mitch McConnell says his chamber is making real progress on its own version of a tax plan. The Senate Finance Committee is expected to vote on that plan tomorrow, and then it's expected to take it to the floor the week after Thanksgiving. Now, there are some senators who are worried about linking the repeal of the individual mandate to tax reform. There's also some concern about the expiration of the individual tax cuts. So still some tough negotiations ahead, but Republicans are counting today as a success, and they're thankful they can go home for the holiday with a big win. For Nightly Business Report, I'm Ilan Mui in Washington.
Still ahead, it is all hands on deck.
I'm Morgan Brennan in Marinette, Wisconsin, America's heartland, where shipbuilding is a big business, literally. Coming up, we're going to take you inside an active Navy warship. on Nightly Business Report.
Merger talk has helped power the market recently, and late today there were reports of even more. Comcast has reportedly approached 21st Century Fox to express interest in its entertainment assets, including its movie studio, TV production, and its international operations. There are also reports tonight that Verizon is exploring acquiring parts of Fox, but that's in the very early stages. Now, we recently reported that Fox had held talks with Disney about selling some of those assets. Shares of 21st Century Fox rose initially in after-hours trading on that report. Comcast is the parent company of CNBC, which produces this program.
Meantime, the Federal Communications Commission voted to loosen media ownership rules, marking the most significant changes to media ownership rules in a generation. That rollback could lead to further consolidation as traditional media look to better compete with digital companies. The changes are taking place as the FCC considers whether to allow Sinclair to merge with Tribune Media. It would create a company that reaches 72% of the country. Shares of Sinclair and Tribune Media both rose today.
And the FCC also voted to let phone service providers proactively block robocalls. Commissioners from both sides of the aisle hailed the move as a necessary step to protect consumers. The FCC receives more than 200,000 complaints every year about unwanted calls. The agency's chairman acknowledged that even more needs to be done.
And Congress, as we've been reporting, is expected to increase the defense budget. That could mean more money for Navy ships, even controversial ones. Morgan Brennan was given rare access to a newly active warship in Marinette, Wisconsin.
The ringing of the bells is a historic tradition, still being carried out today on board Navy vessels, including this one of the fleet's newest and most advanced, a Lockheed Martin Littoral Combat Ship, which will soon be commissioned as the USS Little Rock. Commander Leonard Mitchell is the warship's executive officer.
This is where we fight the ship.
This is where the action happens.
It is.
His crew of 50 have been conducting tests on Lake Michigan for 6 months.
With the gun mount and with our airborne mission zone, the aircraft capability that we bring to the fight, again, navigationally and warfighting, LCS brings a lot of assets to the combatant commander. Those unique capabilities and the fact that we can get it done with less personnel makes us a huge component of the future of our Navy.
These smaller ships operate close to shore in just 14 feet of water. They have the latest Navy technology and can swap out the types of weapon systems on board. But cost overruns have doubled the price to nearly $500 million. And schedule delays means the Littoral Combat Ship has no shortage of critics, including Senate Armed Services Chairman John McCain. But the Trump administration wants a much bigger Navy, and it may need ships like this to do it.
This is a warship. It's American steel built with American workers, and it really looks to bring vertical launching systems, take advantage of a lot of what we developed.
7 ships are being built at the Marinette Marine Shipyard, which is owned by Lockheed's program partner, Fincantieri. The companies say production is running full steam ahead, with construction down to 3 years from 5. Price varies and ships are becoming more lethal thanks to new weapons like vertically launched Hellfire missiles. But even with costs doubling from the initial target set in the early 2000s, an LCS is still a fraction of the price of a destroyer or a cruiser. 29 ships have been purchased. Lockheed has 14 and Austal in Alabama has the rest. The new 2018 budget would add 3 more. And it isn't just about building up the military. More orders ensure the 2,000 workers at this shipyard in a community of about 20,000 people keep working, manufacturing jobs in a state that helped President Trump win last year's election. Workers like engineer Eric Nicholson say there's not a part of the community this shipyard doesn't affect.
It's a well-forgotten historical fact of record that American shipbuilding saved the free world, maybe twice, certainly once during World War II. So it's a real privilege to be a part of the industry that does that.
For Nightly Business Report, I'm Morgan Brennan in Marinette, Wisconsin.
Emerson Electric makes a third bid for Rockwell Automation, and that is where we begin tonight's market focus. After failing to convince Rockwell Automation to engage in merger talks twice before, Emerson now upping the ante, raising its offer to $29 billion. Emerson said it hopes Rockwell will consider the number of strategic, operational, and financial benefits it says a merger would offer. Emerson shares fell fractionally to $59.02. Rockwell Automation up more than 2% at $193.61. Time Inc. reportedly in talks again to sell to publisher Meredith Corporation. The potential deal has drawn support from the billionaire Koch brothers, who have tentatively agreed to back Meredith's offer with $500 million. A deal between Time and Meredith could help the company bolster ad sales. Shares of Time up 28% to $16.20. And the Wall Street Journal says an activist investor of Barnes & Noble wanted to take the bookstore chain private with the help of current shareholders and debt financing. Barnes & Noble responded to the proposal that values the company at about $650 million. It said the deal's not feasible. Barnes & Noble shares, though, rose more than 7% to $7.10. And competitive pressures caused Best Buy to slash prices, and that caused total sales to miss the mark. The electronics chain also underdelivered on earnings and gave a weaker than expected outlook for the holiday period. Best Buy shares off more than 3% on the session at $55.25.
J.M. Smucker reported stronger than expected earnings as the maker of Folgers raised prices to offset higher costs of coffee beans, although those costs should improve next year. The company also said a rise in sales in its pet food business helped its results. The shares jumped 9.5% to $116.65. Viacom said stronger ratings for channels that include MTV and Nickelodeon helped its ad revenue remain flat. The Street was expecting a decline, but the company said it expects distribution revenue to continue to fall through next year as cable companies become more reluctant to pay for Viacom's programming due to a weakening subscriber base. And that sent shares down, lower by nearly 4% to $23.69. After the bell, Gap reported its fourth straight quarter of positive same-store sales. The strength was largely due to strong performance in the company's Old Navy business. Gap's overall results and full-year outlook also outpaced street expectations. Shares initially climbed in the extended session and ended the regular day up 2% to $27.48. And Williams-Sonoma also reported better than expected revenue after the bell. That company said results were driven by strong demand in its Pottery Barn and PB Teen stores. Earnings matched expectations. Shares, though, initially lower in after hours, but they finished the regular day up a full 4% to $52.87.
Wynn Resorts has taken a huge gamble thousands of miles from Las Vegas. It is building the largest private development in the history of the state of Massachusetts. Contessa Brewer in Everett tells us whether the bet can pay off.
Take a stroll around Everett, Massachusetts, and locals say the times are changing.
I've been in Everett my whole life. I've owned this business for 12 years. And 12 years ago, the outlook in Everett was grim.
Richard Sasso runs the 810 Grill. Nearby, the most expensive private development in Massachusetts history is going up, $2.4 billion. The excitement is palpable.
I can't wait. I can't wait.
A luxury casino rising like a phoenix above a gritty industrial city at the edge of Boston.
We're thinking about this as an urban Wynn. We located ourselves right in the middle of a major urban destination.
Mr. Wynn's vision was that Wynn Boston Harbor would be a great example in America of how a business can change a neighborhood.
The president of Wynn Boston Harbor, Bob DeSalvio, is charged with bringing that vision to life.
We're standing on the main casino floor, but it's surrounded by a tremendous amount of amenities.
The cranes have lifted the soon-to-be hotel and casino to 14 of its 27 total floors. Workers this week began installing the glass. 4,000 employees work on this project, most of them from Massachusetts, all of them union. Wynn is snatching up rundown properties adjacent to the casino at up to 4 times market value to improve the local aesthetics to match the Wynn brand. It's not cheap, with a price tag of roughly $100 million. But locals approve. 86% voted to allow the casino. Skeptics might ask about residents displaced by rising real estate values. Wynn and the city of Everett are helping them find apartments. Traffic congestion? Wynn is spending $260 million improving infrastructure, local roads, and mass transit. And environmental impact?
For us in Everett, we were always told, don't go near the water, you'll get sick. Wynn cleaned that entire site up. So in Everett, it's a huge environmental win.
Barges dredge toxic soil from this former Monsanto chemical facility. Wynn is spending $30 million to reclaim the land. Plants transforming an industrial waterfront into a living shoreline. The public will get access to the river here for the first time in more than a century. Wynn's $25 million annual tax bill makes up about a third of the city's tax base. Wynn feels confident its big gamble will pay out. And though other casino towns have struggled, notably Atlantic City or even Biloxi, Everett seems to think it's hit the jackpot.
I would never bet against Steve Wynn.
Wynn Boston Harbor is scheduled to open summer of 2019. So far, it's looking like a win-win. For Nightly Business Report, Contessa Brewer, Everett, Massachusetts.
Coming up, a masterpiece has its renaissance and shatters records. We'd like to remind you about a special program that we're putting together. On Thanksgiving, we will explore the retirement crisis and different ways you can fund your future. We want to know how you're saving and some of the challenges that you may be facing. You can tell us by logging on to our website, nbr.com, clicking on Contact Us, or you can also post a comment on our Facebook page or just tweet us. If you have a question for our personal finance expert, Gene Chatsky, send us a short video to nbrmail@cnbc.com.
The industrial conglomerate Siemens will cut 6,900 jobs. Most of those will come from operations in Germany and the U.S. and will hit the units that provide turbines and offer services to companies to generate power. Siemens says the move is necessary to better compete.
The world's biggest sovereign wealth fund wants to exit its oil and gas investments. Norway's $1 trillion fund has proposed dropping its holdings of companies like ExxonMobil, Chevron, and BP, despite Norway being Western Europe's biggest energy producer. The fund would like to be less vulnerable to drops in oil and gas prices.
A Leonardo da Vinci painting considered by many to be the holy grail of the old master shattered records at an auction last night. The bidding for the painting, with a controversial past, started at $75 million. And it went much, much, much higher. Robert Frank has our story.
It is only 17 inches tall and 15 inches wide. It is damaged, dogged by controversy and questions of origin. But Leonardo da Vinci's Salvator Mundi painting smashed all records last night when it became the most expensive painting ever sold, auctioned at Christie's for slightly more than $450 million. The buyer is unknown. It went to a phone bidder after a 19-minute bidding war that elicited shouts and gasps from the normally composed crowd.
The piece is sold.
Fewer than 20 of Leonardo's works survived. This is the last one in private hands. The rest are all in museums. Now, despite the painting's controversial history and condition, it has been painted over and then restored several times. Christie's marketing campaign was considered a new model for the auction business. The painting attracted 27,000 people as it toured the world. Christie's made several slick promotional videos starring Leonardo DiCaprio and other stars, and they sold it at a contemporary art sale, which attracts all the big money, even though the painting is more than 500 years old. So how did a painting that sold for less than $200 in 1958 now hit nearly $500 million? Well, for centuries, it was owned by different European royals, including England's Charles I. Somewhere along the way, it became damaged and repainted. It fell out of sight until 1958, when it sold at a Sotheby's auction in London for £45. It was then labeled a work of a student of Da Vinci's. Now, it disappeared again until an art dealer bought it at an estate sale in Louisiana in 2005 for $10,000. It was then authenticated and shopped around for around $200 million, but failed to find a buyer. Now, in 2013, it was sold to Swiss art dealer Yves Bouvier for $80 million. He quickly flipped it to a trust owned by the family of Russian billionaire Dmitry Rybolovlev for $127 million. Now, Rybolovlev sued his dealer, claiming he was overcharged. But after selling it last night for a $323 million profit, it's going to be hard to claim he overpaid. For Nightly Business Report, I'm Robert Frank.
And finally tonight, Fortune has named its Business Person of the Year, and it's not necessarily a household name. Jensen Huang is the CEO and co-founder of One NVIDIA, and as we've reported, that stock this year has been on a hot streak, up considerably in terms of percentage terms. The company started out making chips that power video games, and today the company's vision has changed, and now it's considered a leader in artificial intelligence and augmented reality. JP Morgan Chase's CEO Jamie Dimon was number 2, and Mark Benioff of Salesforce came in at number 3. We didn't make the list again.
And we didn't get that painting either.
No, we didn't. That's Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
Thanks for me as well. I'm Tyler Mathisen. Have a great evening, everybody, and we'll see you tomorrow, Friday.